What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about Palantir Technologies and their upcoming Q2 earnings. We're going to take a look at what analysts are expecting for these earnings, and I am going to give my opinion on what I want to see moving forward from Palantir to keep driving the stock up. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Over the last couple of days with earnings, we have seen a lot of volatility in the market. It's spiked all the way up if you look at the VIX to around 17 currently, and Palantir has been affected by this as well. We can see that the stock moved down around 2.7% here today. Over the last 5 days, it's down around 3.3%. However, if we look year to date, Palantir has gone on an absolute tear so far. It is up around 185%. And the majority of this run up started in May. We could see from May, where the stock was trading at $7.41 to where it is trading at now, the stock has moved up 145% to a current price of $18.20. And Palantir is expected to announce their earnings on Monday, August 7th after hours. We can see that analysts are expecting around 1 cent in positive EPS, and a year ago they came in with EPS numbers of -9 cents. If we look at Google, we can see that they actually have an EPS estimate of positive 5 cents. This is probably on a non-GAAP basis. If we look at revenue, we see an interesting number. They are expecting $533.5 million in revenue this quarter. The reason this revenue number is interesting to me is because of Palantir's first quarter earnings and the guidance they provided during those earnings. We can see that for Q2 of 2023, Palantir was expecting revenue between $528 to $532 million. And what this tells me is that analysts are expecting Palantir to even beat their own estimates. This can be a dangerous game for a company moving into earnings, because what that means is that investors are already expecting the stock to beat on revenue and potentially even beat on EPS. And that can leave investors in a bad situation if the company comes in and actually misses on both numbers. Personally, I am not expecting them to miss. I think they will come right in line with where analysts are expecting. And the biggest reason for that is going to be their commercial customer base. Last quarter, they grew their customer base by 41% year over year, or 7% quarter over quarter. And US commercial customer count increased 50% year over year from 103 customers to 155 customers. And the reason we need to see Palantir expanding their commercial customer base is what I have highlighted here in yellow. Their year over year revenue in Q1 grew by only 18%. Right now, investors are relaxed in terms of revenue because of the EPS growth that we have seen from Palantir and the positive net income that we are seeing out of the company. However, over the next couple of quarters, there's going to be a big expectation on revenue growth. Investors want to see revenue get back to growing anywhere between 25 and 30%. And revenue growth year over year of 25 to 30% is definitely a possibility. In recent interviews, Alex Karp has came out and talked about the company receiving 12 times as many calls per month as they were just a year ago. If we see those calls being converted into revenue and EPS numbers, we could see a very strong beat from Palantir this quarter. The biggest thing that I personally want to see from Palantir in this earnings call is that they are consistent with the numbers. If they come in with strong beats, then that is amazing. That is going to send the stock higher. But I want to see them sticking to their word and hitting the numbers that they say. And one of the things that I'm going to be paying attention to is their EPS numbers. Personally, I look for companies that are profitable, and those are the types of companies that I want to be invested in. And for Palantir, we have seen them just start to hit profitability, and I want to see them continue that profitable run. And we can see that analysts are expecting profitability this year as well. The average estimate for EPS comes in at 21 cents. We can see there is a low estimate of 20 cents and a high estimate of 24 cents. There's a little bit more uncertainty around 2024. We can see that the average estimate comes in at 24 cents. The low estimate drops down to 12 cents, and then the high estimate is 30 cents. And again, revenue growth is very important moving forward for Palantir as well. Analysts currently are expecting around 15.9% for this year and 18.7% for next year. And these numbers are very important. We want to see them get back up into the 20 to 30% range at the very least, because that is going to really start driving the business and show that there is a lot of demand for this service. I've talked about it before on the channel, but personally, I like buying businesses that are below a 60 forward P ratio. And we can see right now, Palantir is trading at an 86.21. In my opinion, investors right now are having having trouble valuing the business because there are still a lot of unknowns as to where the EPS is headed over the next 3 to 5 years, as well as the revenue. If they get back to very high revenue growth and then they can convert that revenue into EPS numbers, then we will start seeing this PE ratio drop down and we'll start seeing where Palantir is actually being valued at. So with that said, keep in mind that I do own shares of Palantir. I like the company for the next 3 to 5 years. I think they have a lot of upside potential ahead of them because they are in a software as a service business. That is a very lucrative business because basically once you have produced the software, you can sell it to a variety of customers without very much overhead. And I think that is where Palantir needs to expand their business massively over the next couple of years into the commercial space. They need to grow their commercial base and get a lot of consumers, whether they're in the food industry, the technology industry, whatever it may be, their software could impact a lot of businesses. And this is where they will see a large amount of growth over the next couple of years. So keep in mind, that is all my opinion. Do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.